Hey everyone, welcome back to the channel. This is Vincente Avila, better known as Tico the Realtor, your Texas Realtor. If you're thinking about buying your first home, you probably heard about FHA loans. But why do so many first-time buyers choose the FHA loan? In today's video, I'm going to break down exactly why FHA loans are so popular, who they are best for, and whether it might be the right move for you. So let's get into it. First, let's quickly define what an FHA loan is. An FHA loan is a mortgage backed by the Federal Housing Administration, FHA, which is a government agency within the Department of Housing and Urban Development, HUD. This means that the government insures the loan, which reduces risk for lenders. Because of that reduced risk, lenders are more willing to work with buyers who might not qualify for a conventional loan, which requires a larger down payment. The number one reason most first-time buyers choose FHA loans is the low down payment. With an FHA loan, you can buy a home with as little as 3.5% down. Let's do the math on that. If you're buying a $300,000 home, a 3.5% down payment is $10,500. Compare that to a conventional loan where you might need 5, 10, or even 20% down. That's a big difference. For a lot of first-time buyers, saving for a down payment is the biggest obstacle, and an FHA loan makes that barrier much easier to overcome. Another major reason people go with FHA loans is the flexibility with credit scores. Most FHA loans allow you to qualify with a credit score as low as 580. In some cases, even lower with a higher down payment. Compare that to conventional loans, which typically require at least a 620 credit score and often higher for the best rates. So, if your credit isn't perfect, that's okay. A FHA loan gives you a realistic path to home ownership instead of forcing you to wait months or years to improve your credit score. However, I always recommend improving your credit score to get the best possible interest rate, right? The lower your interest rate, the more money you save. And who doesn't like saving money? FHA loans are also more forgiving when it comes to your debt to income ratio, your DTI. So your DTI is simply your total monthly debts divided by your gross monthly income multiplied by 100 to get the percentage. Let's say your total debts for the month add up to be $3,000. That's your rent, credit cards, student loans, etc. And your gross total monthly income is $8,000. You take the $3,000 and divide it by 8,000, which gives you 0.375. Then you multiply that by 100 to give you a percentage of 37.5. So you have a debt to income ratio of 37.5%. Generally, a DTI ratio of 36% and below qualifies you as a reliable borrower. However, it varies from lenders and loan products. With an FHA loan, you can often qualify with a higher debt load compared to conventional loans. FHA loans can go as high as 43 to 50% debt to income ratio in certain circumstances. This is huge for first-time buyers, especially younger buyers who may still be paying off student loans or just starting their careers. Let's be real. Getting approved for a mortgage can feel overwhelming. FHA loans are known for having a more forgiving underwriting process. What does this mean? More flexibility with past credit issues, more leniency with employment history, and more willingness to work with unique financial situations. So, if you had a few bumps in the road financially, That's okay. FHA loans give you a second chance, but get your credit in order. Here's something a lot of people don't talk about. FHA loans are assumable. That means if you sell your home in the future, a buyer may be able to take over your loan, including your interest rate. In a high interest rate market like we're experiencing at the moment, that can make your home way more attractive to buyers. Now, FHA loans aren't perfect. There are a couple of downsides you need to know. The biggest one is mortgage insurance. With an FHA loan, you'll pay an upfront mortgage insurance premium that is paid at closing. That typically is about 1.75% of the loan amount. So on a $300,000 loan, that would be about $5,250. In addition, you will have a mortgage insurance premium, MIP, that is paid annually and added to your mortgage payment. The cost is based on the loan amount, loan term, and size of your down payment. In most cases, that monthly insurance stays for the life of the loan, unless a larger down payment is made. But most buyers that apply for the FHA loan don't have a large down payment. With that being said, this means your monthly payment could be higher compared to a conventional loan. However, if it makes financial sense, you can refinance your mortgage from an FHA to a conventional mortgage after establishing a solid payment history. So, who is an FHA loan really best for? It's a great option if you have a lower credit score, or you don't have a large down payment saved, and if you have some existing debt, or just want an easier path to approval. At the end of the day, FHA loans are popular because they make home ownership more accessible. They remove a lot of the barriers that stop people from buying their first home. If you're thinking about buying, FHA could be the stepping stone that gets you there. If you found this helpful, make sure to like, subscribe, and check my website at ticotherealtor.com. All my contact info is there. So if you have any questions or you're ready to make that move to home ownership in the Dallas-Fort Worth Metroplex, I'm your guy. I'd be happy to help. Again, this is Tico the Realtor, your Texas Realtor. And remember, keep God first, and I'll catch you on the next one.